Property investment works well with the strategy. In determining how you would want for property investment to make for you, it is important to first define the outcomes that you want from property investment. Are you looking to build property or to make fast payment, or both? Depending upon the desired outcomes, you may choose the short-term strategy, one long-term strategy, or a combination of these two. The initial strategy for creating money at property for the short term is putting in fix and flips. The finance strategy makes as follows. The property investor buys finance properties below market value because they are foreclosures, short sales, or in the worst shape, and want plenty or repairing, and the capitalist then runs on improving the investment place and sells it for a higher cost than the first investment, hence making a quick profit. Urban rentals are growing into wide distributed among the investment strategies for making money at property. Being this kind of investment strategies means property investors lease out their properties for a brief period of time, from one night to not as much as 6 months. Urban leases have proven to take lucrative investments. Dependent on this position, investment properties will produce higher income as urban rentals rather than conventional leases. The property investment is the best way to spend money. Point. Whether it's $10,000 or $100,000. Through realty investment or passive property investment, there are so many benefits to growing into a property investor. Here are 3 reasons that give property the best choice to spend $10,000. As the small-time investor, you want something that offers a better return on investment with very little risk. While there is some danger to traditional property investment, it is just not as dangerous as other types of currency assets. Take a look at the property industry. As a summary, property investing in the property industry has fewer risks than stock assets, particularly when investing in property for the long term. The longer property investors give investment properties, the fewer risks of failure they have, because home costs and assets develop with experience. Additionally, the property investment can usually have value, since properties are tangible assets, unlike the product investment which might fall down in value anytime. Moreover, the more investment properties the property investor buys and owns, the lesser associated risks he/she encounters. Property investors also have the power to determine if they need to spend in trade property or residential real estate. When investing in the latter, there are some other types of residential finance attributes to put in. For instance, single-family houses, multi-family houses, condos, townhomes, etc. Another option is to invest in conventional property or urban finance properties. Financing the investment place is a large concern for property investors, whether in the commercial or residential property industry. Nevertheless, gaining funding for these residential properties is really not that difficult. There are many methods for finance, including the traditional mortgage, personal money lenders, hard money, line of payment, establishing partnerships with other property investors, and more. Typically, you may make a 15 or 30-year debt with 20% down payment. Subscribe for more financial videos.